Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, June 30th, 2016, the end of the first half of the year, the end of the second quarter of the year, the end of the month of June, and also for Friday, the 1st of July, as we will not be doing a market preview for Friday. Usually we don't. We certainly won't do one here going into the long 4th of July weekend when most of the folks will probably be out of town. Here's a look at the ES front month futures contract. This is the daily chart of the broad market, the way it's meant to be looked at. And you can see we've bounced back from this little drop we had after the Brexit vote. So here's a look at the fibs. I'm going to put the fibs on here. And just so you know, this puts us basically at the 62% retracement is 2067. We closed at 2067. So right at the 62 retracement of that drop is where we are. That's often the stall out point. The other interesting thing is where we actually closed at the main session. I'll show you that when we get to the intraday action here in a moment. Let's go through the rest of the day on the daily charts first, and then we'll take a look. So crude oil back up $1.70 to 49.55. Gold up 4.2 points. Spiders up 34.68. Now this is all very interesting because there's a lot of chatter that maybe the Brexit's not actually going to happen. And if it doesn't, it'll be interesting to see what that means for the markets. NASDAQ 100 up 74 points. Now there was a gap again today, so we'll look at that in a minute. Much of the move was actually the gap. SOX up just 13. Interesting that the markets recovered, but the SOX is much lower than it was when it started this. Biotech's up 57. Still bouncing off the lows. The VIX dropped $2.11. Look how close in retrospect. Look at how specific these lines are. The pink risk line of the 13 buy signal at the end of March was support. The static trend lines, the green line, we came almost up to it. So interesting to see that stuff. Low reading on the trend again at 0.62. If we didn't have that one reading at 2.25 back on what was that, Friday, I guess, you know, we could really see this moving average drop here. Remember, when it gets to 0.85, that's a sell signal on the 10-day moving average. NASDAQ volume 1.9 billion, a little bit better than Tuesday, but obviously about drop off from from Friday and Monday. Advanced decline ratio positive 1984. That's just as good. That's on the NASDAQ, just as good as it was the day before, and plus 2210, same as it was the day before on the New York. Google gained $3.93, back up to the 10-day moving average. Apple up 81 cents. Amazon up 7.68. Amazon continues to stay near the highs. You've got Netflix up to $91, which is up $3. Had a nice run today in Tesla. Nice trade for us in Tesla. It was up a little bit here as well. All right, let's look at the intraday action. So here's the ES and 5-minute candles. And again, you can see the gap up and the drift higher for the entire session. What's interesting is the last 3 candles are post-market close. So that's in the aftermarket for the stock market. 2062.50 is where we closed. That's that magic number once again. It was the high about it 2 hours before the close, and then basically the number we closed at. We did get above it briefly. And then this 2067 level that we moved up to in the aftermarket, that's the 62% retracement, fib retracement of the whole move down. So, you know, we're right at, again, the magnet point, 2262.50. We keep hitting this level for the last year and a half, magically. And then on top of it, we basically are at a resistance on the fibs. So this move, I mean, it's obviously a news-driven move, and I think some people don't think this is actually going to come to happen at this point. But for the most part, what they've managed to do, and I think this is what you have to focus on, is even though we had the little dip, look at this daily chart one more time and just realize that they've brought this thing back to basically where we've been sitting for the last month and a half. And, you know, I think it felt like if you take the Brexit vote out, this is where they wanted things to close for the quarter and half. And remember, there's a lot of money and bonuses for institutional hedge funds that are pegged to the end of the midpoint of the year and the end of the year. So, like, for example, they all get paid right now for whatever they made during the year. If you look at where we were back at the beginning of January, right, we're significantly higher. They got the market up here. They got to hold it up here. I think there was a little panic after the vote and the sell-off, but now they've got to hold the market up here. So that means that their bonuses are going to get paid out. Now, you get to July, and if there was selling pressure, you know, it can start to come in. In other words, maybe they'll play money on the short side for the next part of the year, and they just held it up to get those bonuses printed. So be careful, you know. But again, tomorrow's the end of the quarter, end of the month, end of the half year. Usually nothing will happen for that. And just like today, the second half of the day was a basic drift, nothing exciting. You could tell, you could just feel today after the first hour especially, you could just tell it wasn't the same as the last 3 days in terms of action in the market, even though it looks like we're up a lot on paper, obviously. And then Friday, even though it's the 1st of July and the statements are printed and they're free to go out and do what they will, you got to figure most of the big players are already gone for the long weekend, as we've been talking about. They're probably gone now, but I don't know if anybody's sticking around extra just because of all this news volatility. But I wouldn't expect much out of Friday anyways. We won't post stock picks for Friday in the report. We will do them intraday. I'm going to look and see if I find anything tonight for Thursday and put it in the report after this action. Maybe there'll be something that comes up. In terms of economic data that's left for the rest of the week, we do have 2 days left, obviously. We've got the weekly initial and continuing jobless claims numbers an hour before the bell tomorrow. Chicago PMI 15 minutes in tomorrow, that's Thursday. Natty gas an hour in, that's the weekly number. And then on Friday, half an hour in, construction spending and ISM index. And at 2 p.m., auto and truck sales. So nothing significant, probably nothing that's going to be able to override just the general malaise that should stick in for end of quarter and the 4th of July holiday. And again, of course, markets are closed Monday. I will do market previews. I'm going to try to do them Friday anyways in the afternoon for next Tuesday, and then I'll be taking off to enjoy my weekend. Those of you who are in our mentorship programs, I probably won't get to your blotters until sometime next week. I tend to take 4th of July weekend off. One of the few holidays I can actually enjoy around here. And that's it. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. I think July could be a good month. It usually has some movement as they get going for the second half of the year. So won't start Friday probably, but next week it will. Have a great trading week.